So video is actually created in a way to really let you understand how can you invest your money in this COVID-19 period. But do take note that this is not actually providing you financial advice, and do your own due diligence. Thing that I have been actually sharing with my own inner circle, and I think that is actually very helpful, because every time I share this topic, the discussion that we start having, right, is always being extended. Okay, so looking ahead of time, one thing to take note that we can never predict the market. We can never predict when there will be a cure, when there will be a vaccine, okay, for this coronavirus. So to me, right, the message that I want to let you know, right, let's assume the worst case in your investment. Let's assume there is no treatment, there is no vaccine. How can you protect yourself? Okay, let me even tell you something, okay, probably through my own reading and understanding of the market, through investing for multiple years myself. Let's look at SARS, 2003 pandemic, or even epidemic itself. During SARS time, right, do you know that there is actually no cure and no vaccine? Okay, so basically what happened for SARS, right, is the virus just killed the person who had the virus, and over time the spreading has been contained, okay, which is what we are trying to do today, trying to flatten the curve. Okay, let's not hope for any miracle drugs or neither miracle vaccination that come in play. How about that? Okay, another pandemic I want you to also look at, right, is actually AIDS. AIDS is also a case where it actually killed many people in US. Okay, and until today, right, there is still no vaccine for AIDS, but the treatment, right, is something that is still on an ongoing basis since that period. Why am I sharing this two information with you, right? Is to let you understand, what if we don't have a cure? What if we don't have a treatment? Okay, that's one question that you should ask yourself. Or what if we don't even need a cure, neither a vaccine? Okay, that should be the way we should be looking to invest into the future. So that is what I shared in the earlier video, right, is that do not predict the market, but let's look into the future and see what might hold for our own investment portfolio. Is that the curve is flattening around the world. Okay, we don't talk about countries that are not prepared, countries that are not very well established, and neither help from globally. Okay, it is not say that we should not look at it, but do take note that even in terms of the medical treatment, right, you can see that corporations, pharmaceutical companies, healthcare industry, right, they are collaborating with each other to find treatment and the vaccine. So they totally are willing, right, to share their trade secret. How do they find treatments for the other diseases they are having today? This only tell me one thing: government is really strategically partnering around the world with any government, right, that's willing to share good information. I mean, look at Taiwan. Taiwan is a very clear example. For the last few years, they have been rejected by the WHO to be as a member of the WHO. But today, because Taiwan did very well, right, they are actually included into their WHO assembly. Okay, we should not talk about politics in this channel. Okay, I don't just want to talk about the coronavirus itself, but at least for now, I'm looking at the curve is flattening, which is a good sign for investor. Okay, one thing you need to know, why the market dropped the last 2 months, right, is very simple. The market drops because of the future profitability of company due to this disease or due to this virus. That is why the market really dropped from the top all the way like a 40%. And today, if you look at just use S&P 500, right, they actually grew back to like halfway. Okay, that's for S&P 500, which is the top 500 companies in US. But another index, right, is actually called NASDAQ, which is a technology index for US. At probably last week, if I'm not wrong, it actually went all the way up to the the highest point, close to the highest point. And today, what's today's date? this video is taken, what's the date?
17 May.
17 May. Okay, so this video is recorded on the 17 May. Okay, when you watch this, I will not know S&P where it's going, or neither the Nasdaq. But I'm sharing this so that you can understand that even though in this today environment, right, there are still companies that we can look to invest. Cool. And like I said in the earlier video, I want to share something that I really, for the last many years that I have been studying, which is the central bank. Okay, to really understand how the equity market can continue to go on or not, right, it's really looking at the debt market, and likewise looking at the financial system, which is the how the money sides, monetary policies are being created. Okay, if you understand central bank, right, what's central bank's main two objective? They actually have two main objectives. Okay, number one, their first objective, right, is to make sure there is price or asset stability, which means, right, inflation must over time grow in like a 2% kind of growth. And is it actually their mandate? Means, right, central banks, right, are designed in a way, right, to purely create inflation by law. Because it's their mandate. It's like everyone have an objective, and central bank is the mandate is to inflate. Means money have to be weakened. Okay. Then second thing is central bank's role, right, is to make sure that it's full employment in the economy. Means making sure that people are employable or stay employed. Let's put it this way, so that they can go into full employment as a country. So you can, I mean, purely looking at these two statements or these two mandate, right, you know that holding cash, right, is not viable for you. Why? Because it is in their mandate, right, to inflate money and to weaken the cash itself. Means your cash holding power, right, just based on trend, right, is going to get lesser and lesser money. That's a fact. You can go and do some research. But why I want to at this point talk about the central bank, right? Very simple. We are talking about the fiscal policy, which is fiscal policy is government action, okay? But let's not get there, because it's going to be a can of worm, and there might be a lot of debate over here because of the political environment that we are talking about. But let us look at the money side of things, which is monetary policy by the FOMC, which is the Fed members, right? What they have done, right, comparing to the last crisis, right, I actually mentioned that they were quicker and they are more aggressive. Okay, so putting some numbers to it, okay, during the last crisis, right, when central bank decided, okay, to print QE, right, there was actually a 6 months delay. So that is the reason why during that crisis, right, market actually went up and then come down again, because both sides of the politician are not willing to basically have this agreement to do quantitative easing. That is why market go down again the other during the 08. This time around, yes, maybe the market went up and then may come down and then go up, may create a U curve. Doesn't really matter. I'm not going to predict the market, by the way. But I just want you to understand, right, the reaction today is very immediate. Why? Looking back at the timeline, right, in February or March, right, during that period, the central bank in US actually cut interest rate twice and actually increased their printing press, which is they print money of $2 trillion within a single month. The last crisis, right, when US start, which is in 08, when they start doing QE, right, it was only 3% of their GDP, and it took about 6 to 7 months for the QE program. But this time round, right, it is like 10%, because it's about $2 trillion as we are talking about today. They might roll out more quantitative easing. Okay, and the last time round, right, if you really look at the numbers, right, they did 3 quantitative easing over a period of 6 years. The total amount is about 4.5 trillion. Okay, but you see, not even a year, right, they already done close to 2 trillion. Do you see the magnitude? That's why in the earlier video I actually said that Warren Buffett actually said he can't be the lender of last resort. Why? Because the central bank is supposed to be the lender of last resort for all financial system or most economic structure. That is why I keep telling my investors, right, is that because of the quick response and the aggressive response, right, central bank actually create liquidity to everyone. Okay, when I say everyone, right, okay, let me give you some numbers, right. They actually give money to people that are not employable, means they lose their job. One, they give a paycheck, they give a check to them, they mail it to them. Second, they actually provide liquidity to banks and ask the banks, right, to lend money to businesses, any business. And some of the scheme they had, right, was even, because now US is close to zero interest rate, so it means anyone that want to borrow money, right, is very low, it's very cheap because it's close to zero. And not even that, you know, they even want to give guarantee for the loans that the banks are borrowing to lenders, not lenders, borrowers. Okay, so that's how quick and how aggressive they are. And thirdly, right, not just deal with the consumer, which is the employee, and also the SME, the corporation, they actually start purchasing equity. So even central bank, right, went into purchasing assets for themselves during this time. So that is probably one of the reason why, if you look at the US market, right, even though every day, right, you hear a lot of bad news, like, you know, people are losing job. It's like at this moment, probably 30 million of US population is losing job due to the unemployment claims. But if you look at the stock market is actually supported. Means it's not going down, neither is it going up. Okay, so one thing I shared early on, how the stock market reacts, right, it is really understanding future profitability. So since the last drop, right, in terms of the 40% drop, right, central bank came out very quickly, government came out very quickly, they roll out a lot of plans to give money to the people who need the money. Okay, and I think this week they even talk about another rescue package to help the economy and to help its own people. So they are very prepared. And even the central bank actually said that they will do whatever it takes, right, to support the economy. Okay, which is one of their mandate, right? The second one, remember the first one is they will basically make sure that there's price stability, means inflation. Secondly is they actually said that they will want to go into full employment. So what they are doing is they are printing money to support the economy, making sure that people with jobs stays employed, or making sure that corporation has the money to operate their businesses. Cool. And they are even working with banks, right, the local banks in US, right, to lend money to people who need the money. So that is how quick and how aggressive and even coordinated between the both political party, which is the Republican and the Democrats. So I hope that this video, right, will give you some insights to what I'm thinking today. Okay, and remember, do note, we can never predict the market, but we only can see and anticipate what might hold in the future. Okay, do not hope for a cure. Of course, I would love to have a cure, I would love to have a vaccination, but as an investor, right, we need to plan for the worst case. But at least one thing I'm looking at, right, the curve is flattening, which is a good sign, right? So I hope if you have any questions for me regarding this video, this sharing I have, or this insight I have, right, do comment below. Okay, and if you really like what I'm sharing, please support me so that I can constantly share insights that I have learned throughout the year with you. Okay, so do like the video, subscribe to the channel, and also likewise turn on the notification bell. So thank you for your time, hope to see you again. Bye bye.